Traders say bond yields dropped further today as demand by local investors continued across the curve. For next week, however, traders are expecting buying interest to persist as unmet bids from the primary market auction should filter into the secondary market given the improved supply in the bond space. I have Dumebi Udegbunam, is a fixed income trader at UBA. He joins me now to recap activities in the market this week. Thank you so much for your time today, Dumebi. Let's first get into the sentiments that we're seeing play out today.
Thank you, Kenneth. Thanks for having me. Well, we've had a really short week, only 3 active trading days due to the public holiday. So we've seen a quiet market trading today. However, we've seen slight bearish sentiment, people taking profit to close the week. As I earlier mentioned, we've had a short week, so we've seen slight bearish sentiments on both sides of the market, the bond side and also the treasury bill side of the market.
But are investors positioning, especially on the bond side?
Well, we had a bond auction on Monday where over 300 billion was sold at the auctions, the 2028, 2036 and the 2050 bond. We saw yet again another drop in yields to 12.35 on the 2028, 13.15 on the 2036 and 13.25 on the 2050 compared to where market was trading as at the time of the auction. So we saw a drop in yields. However, they sold more than what they were offering. As usual, this has been the trend for the past 4 or 5 auctions we've had, which is clearly showing the demand, or should I use the word, the debt perseverance of the government right now. They are really poised to borrow more to fund the deficits in the budget. So we saw drop in yields in the market, and we also saw cherry picking upon resumption for the holiday on Thursday. But as today, we're seeing a reversal in that. We're seeing sell-offs, and market participants were selling to take profit to close the week.
All right, but how are we seeing this filter into the treasury bill space?
Well, the treasury bill market has been a bit quiet, as we've seen in the previous payment auctions. Right now, we've seen conservative drop in rates from an ultimate high of 9.75. We've seen a drop to 9.65, 9.4, 9.15, and then a year's low of 8.67, which was the last PMA auction that closed. We also have a payment auction coming in on Wednesday, and we also have the MPC meeting too coming in next week. So in the treasury bill side of the market has been a bit quiet. Also, we're seeing a bit of sell-offs. We've seen a bit of sellers. The bears are dominating to also take profit to close the week.
All right, let's get back into what we saw play out during the week with the OMO auction yesterday.
Well, in the OMO auction, actually, as we've noticed, the rates have been maintained from the beginning of February till now. But what we've been seeing is a drop. If you compare this period last year or this period 2 years ago, the amount of volume being offered in the OMO auctions were about 300 billion, 400 billion. Now we've seen a drastic drop to about 20, 30 billion being offered in OMO auctions. So we've seen the depth in securities there. That is a lack of supply in that market, and we've not really seen a lot of players around that market.
But looking at the bigger picture for the markets, though, would you say that Nigeria's debt management strategy is still on course?
Oh, they're doing a fantastic job right now. If you see how rates have dropped from Q1 to where we are right now, they found a way to manage the rising debt to the rising cost of borrowing right now. They found a way to manage it and try and maintain rates at a low. So yes, they are on course and they are close to meeting their debt profile target, most especially on the domestic side of it. So they are on course. Even despite the increase or the addition of the supplementary budget, they've still found a way to meet, because one, there's the demand in the market for our securities, and also they also have a shortfall to meet. So they've done a fantastic job in maintaining rates and also reading the market well.
On the liquidity front, though, what are your expectations for the rest of the month?
Well, for this month of July, we had we are awash with liquidity. We had the 540 billion matured bond, about 540 billion matured. Then we had a lot of coupon payments, about 200 billion in coupon payments, and also on more maturities. So give or take, we had an estimate of about 1.1 trillion in maturities that came into the market. And we also had a fact payment that came into yesterday, about 700 billion, which is a 33% increase compared to where we're coming from the previous month. So we're really awash with liquidity. However, we had a humongous CRR debit. I think industry figure for the CRR debit this week was about 300 billion. So it's safe to say that in terms of liquidity, the month of July was a fair month.
All right, let's get into another story that has been making the round most of today as well, talking about that planned launch of the digital currency in October. How do you think this is going to impact the currency space in Nigeria?
Way to the, should I use the word, the next digital revolution that we're seeing around seeing around the world right now. We've had four revolutions. We've had four evolutions in our world right now, and this is the next one. This is the digital evolution, and Nigeria, as the largest economy in Africa, doesn't want to be left out. So this is a one step closer to greatness for Nigeria as a country. So this might actually improve our performance in terms of import and export activities for Nigeria, and also boost us in terms of playing abilities amongst our peers.
All right, but finally, now before you run, because we have just a few seconds left on the show, but I'd like to get your expectations for next week's MPC.
So next week, well, we expect them to maintain, we've seen 4 consecutive drop in inflation rates, and also we've seen a growth trajectory from 0.1 to 0.51 in terms of growth. Although it's not a comfortable GDP growth rate, but this is a clear sign that all the activities by the CBN in conjunction with the federal government seem to be working. So we expect them to maintain the MPR rates going into this meeting. Let's see how further well we can exercise the different parameters put in place by the CBN in conjunction with the players in the market and the federal government to get us into a sustainable growth strategy to close the year Q3, Q4.